Hello again, fellow BeachBum traders, and welcome back for part 2 of our weekly trading game plan for the week of March 21st through March 25th. And hopefully you have already seen part 1 of our weekly trading game plan for this week. How to make money amid rising interest rates. If you have not already seen part 1 of our weekly trading game plan for this week, we would highly recommend that you view that video, as that does all the market analysis, gets all of our input data that we use to pick our stocks in part 2. So now we will talk about the stocks that we want to put on our various watch lists to buy for next week and looking forward. So again, we'll get started with our game plan for March 21st through March 25th. Okay, I've got my weekly watch list pulled up on the stock screen in the online browser version of Webull, where I typically maintain the master watch list. And right now, Webull is offering 5 free stocks when you open and fund a new account in Webull. Normally they offer 2 or more free stocks. Right now they're offering 5 free stocks. So if you're not already using Webull, here's an opportunity to get 5 free stocks by getting Webull. And you can find our link to Webull on our YouTube account at BeachBum Trading on YouTube, and in the links section of our homepage at beachbumtrading.com, bum without the U. So again, you can take this opportunity to get 5 free stocks right now as of the recording of this video. So we have various videos about how to create and maintain watch lists in Webull, so please see those. I will just walk through the updates to our watch list. First, couple trade updates, or a trade update, is we got stopped out of our latest long position in IMMR Immersion, which is the haptic technology company. It ran up and then it turned down, stopped us out. Pretty much a break-even trade on that. We got a little bit of money. And then we also made money by selling and buying back covered calls against this position. So we have a couple videos on how to sell covered calls, both in Webull or E-Trade. So we'd highly recommend that you check out those videos so you can use a covered call strategy to make money even on a position that's not profitable at a given time. So if you happen to stay in IMMR, you might have been able to continue to make money, but again, we got stopped out, but we did make money on our covered calls. So let's talk about our watch list updates for our weekly watch list. As we noted in part 1, there's really not a play on natural gas. I mean, that you could day trade using boil or cold, or some of the other ETFs on the actual price of natural gas for very short-term plays, but there isn't a really good swing trade right now, so we're going to take boil and cold off of our real-time watch list, and we'll keep it in the background. And if we see a play come up, a swing trade come up again in natural gas, then we'll add those back in. So I'm going to remove boil and cold. You can see how easy it is to maintain your watch list in Webull. I just right click, select, delete, and I can remove them. I have them on my ETFs watch list, so I can still watch any activity in boil and cold that way. INDL, we noted, I think it was last week, we added INDL to our watch list, which is the index on India. And you can see it kind of has run up. We'd kind of like it down here. And if you listen to part 1, there are some potential issues with India in terms of the U.S. potentially levying sanctions against India because of their involvement with Russia, buying oil from Russia, buying military systems from Russia. So we're going to leave INDL on our watch list with the knowledge that, you know, if those sanctions get levied, it may impact the Indian market, economy, etc., and we might see a precipitous drop in INDL, which may open up an opportunity. We just have to, you know, be careful and listen to the news. What exactly are those sanctions, and what impact would that have on India? So we're going to leave it on our watch list with the knowledge from part one about potential sanctions on India. DRIP is a short on oil. If you're not already don't already have a short on oil, there are potential opportunities if oil spikes back up to 130 or higher. We already have a position in DRIP, so we're just waiting for oil to come back down. So we'll leave that on there for now. Again, if you may have opportunities to short oil using DRIP, and we'll also show you a little bit later in the video another way you can long or short oil for any kind of swing day momentum trades. We're going to remove Bud, Budweiser, Anheuser-Busch off the watch list. You can see it's already run up. Look, you know, we were hoping we'd get an opportunity. It didn't really manifest itself, so we're going to take Bud back off. We're going to leave DRIP. ELTK, we put on our watch list last week. It's a low float. We're kind of waiting for it to come back down. We'll leave that on there. I'm real torn about whether or not to leave Ethereum on there. I would like it down around 2,000. It's obviously it's a cryptocurrency, very volatile. I guess I'll leave it on there, and we'll see what happens. It's, you know, hovering around 2,500. Again, I'd kind of like a drop, and so we'll see what happens. Gush is the long on oil, and we just use that as a measure to watch DRIP. We talked about INDL. Realty income, we're going to move to the bullpen. As you can see, already ran up. We thought we might get an opportunity to double down. We already have a large position in it's a monthly dividend paying REIT. It didn't turn down. It ran up, and it's not surprising because people are probably piling into these monthly dividend paying REITs, particularly the dividend aristocrats that we again talked about in part one. Okay, one we're going to add to our watch list for this week is a new one, LEU. If you saw part one of our weekly trading game plan for this week, we showed you how you can view the performance of the industries in the groups tab on FinViz, and we identified that uranium was a long-term outperformer. And so we did a drill down. We also have a video about how to drill down on in industry or sector, etc., using FinViz. And we identified that LEU was one that had not already run up. It's a potential lagging the recent run in uranium. We looked at the chart. It looked good. We'll see that chart in a second. It's a low float. They appear profitable. So we're going to add LEU, and it's easy to add something to any watch list. You just put the symbol in the search bar and you see it come up, and then we can hit the star and we can add it to any of our various watch lists. We're going to add it to the current watch list, and then we can look at the chart and we can see it's run up a little bit, but if we zoom out a little bit, it's not too high from this support level. Again, it's a uranium play. Uranium is outperforming right now. It's kind of a low float, so it's a little choppy. But if it were to come back down to one of these support levels, that may be a good opportunity. So again, we're adding LEU. It's a low float uranium play, potential laggard. It is profitable, so we're comfortable with that. So that's LEU. We talked about we're going to move that to the bullpen. So we just move to bullpen. PCG we're going to leave on there for your benefit. We're already long PCG, and you notice it had, we talked about this last week, it had attempted to run a couple times and kind of failed to run, and it's come back down to these support levels. So if you're not already long PCG, you might want to take a look at it. You might want to take a position. There's something going on. It's like I said, it keeps trying to run and it's failing to run, but one of these times it may succeed. So SVXY and UVXY are the leveraged ETFs on the VIX, on the volatility that we typically just watch, looking for opportunities. Again, I think there's day trade opportunities playing just volatility on any given day. BTI, we're going to move to the bullpen. As you'll see, it already ran up with the recent run up in the markets. This is a total market index fund, and it's already run up. I don't see, unless we get a major pullback in all of the markets, I don't see this guy coming back down. So I'm just going to move him to the bullpen. It's also in our ETFs watch list, so we can keep an eye on BTI, and if it does happen to come back down, if the markets really decline, all of them together, then BTI may become attractive again. So those are changes to our real-time weekly watch list, and now we'll look at our bullpen and our other watch lists, etc. Okay, another new one that we want to add to our watch list for this week is Yang, symbol YANG, and this is the 3x leveraged bear ETF on the top stocks in China. And this was alerted. We got an alert from Thinkorswim on Friday at about 11:30, and you can see that was posted by our automation to our Thinkorswim channel within our Discord. So when we got that alert, we took a look at it, and we were hearing what was going on with the Chinese stocks, that they were running, like crazy. You can see this video, how to set these kind of alerts in Thinkorswim. I'll put the link to that in the discussion box below, because that's very useful. It just, we set a price, it triggered, it alerted us, we took a look at it and saw this great opportunity. So if we look at this and add it to our watch list in Webull, we'll put in Yang. This is one we've had on our ETF list as well, but again, it just started running like crazy on Friday because of the events we'll talk about going on in China. So we can zoom in on this guy, and you can see Yang is the bear. So when the Chinese stocks, the largest Chinese stocks, were running up, Alibaba, JD, Baidu, etc., it's pushing Yang down. So Yang hit a new 52-week low. It is still declining. So we didn't jump on it right away. You can see it's under the VWAP. It stayed under the VWAP. It hit this low. But what was going on is, China had their tech stocks were pummeled because they were regulating them. They were finding Alibaba. All those stocks were down huge. And the SEC is threatening to delist them, and they're still under that foreign listing act, that if they don't allow the SEC to audit their reporting, their annual reporting, they're going to be delisted, and that's still there. Now, what caused these guys to run is the Chinese official came out and said, "Oh, well, we'll work with the SEC. We want to support our markets, etc." And so all these severely beat down Chinese stocks took off. And that's what drove this Yang down. Now, I think that's totally irrational. I think the Chinese are going to come out again, and they're going to rug pull those companies, and they're going to crash again. And that gives us a great opportunity to jump in this bear, along this 3x bear leveraged ETF on Chinese stock. And as soon as they rug pull it and come out with some regulation, or they get delisted, this guy's going to take off. And so this is a very nice opportunity. You can see it's got a very nice range from 15 all the way up to almost 50. So I almost jumped on it at the end of Friday after we got alerted. We were pretty excited about this opportunity, and I thought, let me see what it does in terms of rebalancing at 4 a.m. on Monday, because these leveraged ETFs tend to get rebalanced at the open of the market. So I'm going to be up at 4 a.m. on Monday to see what, if this guy gaps down, I'm going to snag a big chunk of it. Otherwise, we'll probably just buy it, unless it gaps up ridiculously, and then we'll just wait. But this yang we see as a great opportunity, again, given the relations with China, or China gets sanctioned. That could affect these tech stocks, these big Chinese stocks. There's all kinds of catalysts that will drive this yang up. So add yang to your watch list. Keep an eye. Again, we're probably going to be buying a large chunk at 4 a.m. on Monday morning. So I hope that all helps. Okay, now let's talk about updates to our Bullpen watch list of stocks. And if you're new to our channel, welcome. And the concept of the Bullpen are secondary watch list of stocks that we don't monitor in real time, but maybe at the end of the day, each day, to see if we want to move them up to our watch list, put them in the game for the rest of the week and going forward. So Corsair, we're going to remove from our watch list or from the Bullpen, as it's already run up. We kept an eye, thought we might get an opportunity, so we're gonna take Corsair out of the watch list. Similarly, DNN's uranium play, that's already run up. We're gonna remove it. GLDI, we still hope to get another position in GLDI if it happens that GLDI is a gold ETN, monthly paying ETN. If we happen to get an opportunity on a dip in gold, we would take another position in GLDI. Grow is an investment company. They're involved in cryptocurrency, etc. It's kind of run up, but as you can see, it's kind of volatile. We'll leave it there for now. One we want to add to our watch list is another one that we identified using that industries option on the groups tab in FinViz. So again, if you saw part 1 or you saw the detailed video on how we can use the groups tab to see the industry performance and drill down and identify stocks that might be interesting in a performing industry. We identified a steel play that had not really run up, and it is called FRD, and we're going to add FRD to our Bullpen. As you'll see, it's a little high right now, but it may offer an opportunity. Also, this is a U.S. steel company, so with the ongoing sanctions, potential sanctions on Russia, etc., well, the sanctions on Russia, potential sanctions on China, a lot of steel comes from overseas, supply chain issues, etc. I think there's an opportunity here in FRD. The other U.S. steel companies have already run, X, Nucor, etc. So we're going to add FRD to our Bullpen and see if we can find an opportunity there. So you can see it's called Fremont Industries, and I just click there and select our Bullpen, and then we can see the chart of FRD. So we can see it's a little elevated, but there's some opportunities if it comes back down just a little bit to a support level. It looks like it's got some range up to 11. So again, if it comes down to a support level a little bit cheaper, we might take a swing at FRD because of the steel opportunities. So that's one we're adding to our Bullpen for this week. We talked about O. We moved O down. We'll leave OESX on. It's a low float infrastructure play, energy play. PayPal we're going to remove. We kind of missed the boat on that. It bottomed and took off, ran up already. So we're going to remove PayPal. We'll take a look at it again if it comes back down. Yeah, we just kind of missed the bottom on that one. Tate we'll leave on for now. It's a defense contractor. It's a little bit elevated. We may have to take it off if it continues in that vein, but for now we'll leave it on. TMF and TMV are the treasury plays, and we're going to keep a close eye on the treasuries, the treasury futures. It looks like they may have stabilized. We do know there's upcoming quantitative tightening from the Fed, but that was not announced in the meeting on Wednesday, and therefore we're not likely to get any further news on when that's going to happen until probably a month from now. At the next FOMC meeting, and so we may have reached a stable bottom in the treasuries, and if that's the case and we see that stable bottom, we may want to take swings at the various treasury ETFs and if they start to turn up, if there's a stable bottom there. If they just are flat, then that's not very interesting, but if we get a little bit of an upturn, if they overshot to the downside, there may be a short-term 1 month or so opportunity there. Until then, the tightening we would expect would cause them to go down further. So the other uranium plays have all run up. We're going to remove them. So URNM and UUUU. Again, there may be short-term opportunities, day trades, etc., but in terms of a swing trade, they've already run up. And then we just moved VTI back down to the bullpen from our watch list. So those are our updates to our bullpen for this week. Okay, one more. We looked at Zoom again, and we already have a position in Zoom. But we're going to add that also to our bullpen as a potential to double down on. If Zoom comes down to a stable bottom and looks like it's going to, well, it looks like we may have already missed the bounce, but if we get another opportunity like this to double down on Zoom, we might take that opportunity to double down on Zoom. And in a minute, when we talk about our shopping list, these may be the types of opportunities you want to look at. We'll talk about that in a minute for our shopping list. Okay, we also want to share with you some additions to our ETFs watch list that I was turned on to by Easy Mike from the Benzinga Discord and the live chats. Thank you again, Easy Mike, for turning me on to SCO, which is this ultra-short Bloomberg crude oil ETF. So it's an inverse to short oil. It's another way to short oil, and it's based on the WTI crude oil price. And the up version of SCO is UCO, so it's the 2 times long on WTI. So I did my research on those 2 ETFs. I believe if you've seen recent other videos analyzing various ETFs to long or short various commodities, etc. I put this into my spreadsheet, into my Google Sheet spreadsheet, analyzed the risk return for SCO compared to like DRIP, which was the other one that we're using, and we could see it has a very nice risk reward for the 52-week range, and it's got a ridiculous top to bottom. And then we also looked at UCO and compared that to Gush. So I've added those 2 to my spreadsheet. I have a sheet with all the various ETFs that I watch, as well as a watch list in Webull that I'll show you in a second. So we compared, here's DRIP, which is what we're currently using to short oil, but that is based on companies, oil and gas exploration companies. So it doesn't necessarily mirror the price of the commodity specifically. It's indirectly correlated, but not directly correlated. Whereas this SCO is directly correlated to the WTI price. So if you directly want to short WTI, you can use SCO. If you think that it's better to short the companies in oil and gas exploration, then you can use DRIP, and similarly with Gush and UCO. to long. So you can see the risk reward on UCO is also very attractive. So that gives us another way to long and short oil, to play oil on any time frame. And again, we'll add those to our ETF watch list in Webull. So here's our overall watch list. So we'll add SCO. And I need to star it to add it to the watch list. I want it in my ETFs watch list. So we've got SCO, so you can see its recent behavior. Obviously, oil's been very volatile, so as oil goes up, SCO goes down. And then we'll add UCO. So again, this gives us additional ways to play oil. We can play the WTI price directly using SCO and UCO. So I hope that all helps. And if you have any other similar ETFs that you want to share to be able to long short commodities that we don't already have, we'd appreciate it. Thank you. Okay, in terms of any changes to our shopping list stocks, the only real point right now is given the market volatility and given that, as we talked about in part one, we don't know if the indices are going to break out definitively and the market's going to head up, or if it's going to fail at that 50 SMA and continue in the downtrending bear market. So one thing, as we pointed out earlier, we were looking at Zoom. We've got Zoom in our bullpen, which we already have a long position. We thought that's probably a good idea, is look at your current positions and think about the ones that you currently have the most conviction in and that are irrationally beaten down. When the market's been declining, particularly tech stocks, if they are profitable particularly and they've been beaten down irrationally, you might want to consider doubling down on your highest conviction long-term positions or investments. So if you're planning on holding these for a long time, you still believe in the thesis behind the company, and it's just been beaten down irrationally in the market decline, then you might want to consider doubling down on those of your high conviction positions that have become just ridiculously cheap, because you can lower your overall cost basis. You may be in the red, it may be below where you bought it before, and it's just irrationally cheap, and this allows you to lower your overall cost basis, which is the cost for the total of your position. So if you buy it cheaper than what you bought it before, you can figure out your average price for the whole position by multiplying the quantity times the price you bought it at, summing them up, and then dividing by the new total quantity. So we hope that all helps. Please let us know what you think of all of this information. In the comments below, in our Discord, in our Facebook group. We've got a new Reddit subreddit community board you can participate in as well. So let us know what you think. We hope you like this. Please smash the like button so that YouTube will share this with more traders around the world, and we can build that community. That's what we want, is we want a community of BeachBum traders all helping each other, sharing information, and helping you succeed in your trading career. So if you're not already subscribed, we hope you'll choose to subscribe to our BeachBum Trading channel. And again, let us know how we can help you. Thank you, good luck, and have a great trading week. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server. where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.